Traders, this is Christian Farmer. It's Traffic Trader Group, and this is your end of day as well as end of week market recap for Friday, November 21st. Happy Friday, everybody. Hope that you guys had a nice trading day, and let's get to it. Let's recap this week. Action-packed week. Risk disclaimer in front of you. Please read the full risk disclaimer, but everything that we're going through in this video is for information purposes only. So we had a nice move today. IWM led today, up 2.9%. SPY was up 1% today. Q's up 0.75%. RSP, which is the equally weighted S&P, outperformed quite nicely. That was up 2%. Notice that was up 2%, and the market cap weighted index, same components, just differently weighted, was only up 1%. So other areas of the market besides the big cap names performed better today. And of course, that's evidenced by what you could see there with IWM and IWC. I'm going to just increase the spreadsheet here so that you can see more. There we go. Look at the areas that outperformed today. Well, biotech has been on the top of the leader list. That has been the strongest group for the last couple of weeks. So that was up there. But you also had home builders up 5%, retail up 3.4%. Some good retail earnings been coming out. CNBC was just highlighting that. Very good job there. KBE banks were up 3.1%. So some different areas. So guys, what was the catalyst? It's something that I've been talking about all week long, right? Since the beginning, I've been talking about it for weeks, but I've been really emphasizing it since the beginning of this week. What caused the small caps to go up so much? If you've been watching my videos, then you know the answer to this. If you haven't, then a lot of people are just still wondering. That's okay. But here's what happened. The 30%. Yeah. So let me bring this up from yesterday. And I'm really harping on this, and I'm going to give a market message about this in just a minute. But here's where I think this is still tough for you to probably see. Okay, so see this number here? This was yesterday, the possibility of a rate cut happening. It was all the way down to 35%, right? So hence the market sold off because it was coming into yesterday. So if we go back one more day, right? This is simple stuff, by the way. This should not be that difficult. It's saying 30%. Maybe I have to go back one more day because it was about 44% chance. Right there it is, 45% chance a couple days ago. Right, people were wondering what happened with the reversal yesterday. Well, it was the economics that came out yesterday and pushed the rate hike odds rate cut odds down to about 35%. Fast forward to today, because you had one of the Fed governors, Williams, come out and said, well, it's a possibility that we could do it. What happens? A huge move up, 65%. Right? So right now, this is what the market is focused on. Is it always going to be focused on this? Not necessarily, right? The market changes. The market's dynamic. That's why it trips a lot of people up from time to time, because people think that they're going to come up with rules such as this, because it's not always the case. But I could tell you, and what I've been saying since the small caps really started to kind of break down, was it's because of the Fed changed their tune. Small caps love rate cuts. What don't they like? When the Fed gets really hawkish. So there's some things that are more sensitive to these things, and small caps is one of them. Hence, you have this big uptick in the chance of a rate cut, and that's why the small caps outperformed today. And so this is one of the issues in the market. And I'm just going to bring up one other thing here too. Right? I've heard a lot of people say that this market got much more difficult to trade once we got to the middle of October. Well, this should tell you exactly what you need to know. Why did it get more difficult in the middle of October? Because that's when this topped out in terms of odds of a rate cut. Right? Here it is. This is when the market's gotten more and more difficult, is when the Fed turned hawkish. That's the majority of what's going on here, guys. And why is this? So why is this such a big emphasis right now? Well, things that I talked about in yesterday's video. I talked about yesterday's video how there's hardly any cash on the sidelines, right? Evidenced by what we've heard in the Bank of America Fund Manager Survey. What else? There's something else, but this is delayed that I was going to show you guys, unfortunately. But I think it's still an important point, right? So what has been the main thing that's been going on here? Ba, 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 and the reason why risk assets have struggled so much, it's because of leverage and it's because of liquidity. Number one, liquidity is based on what the Fed is doing, right? Whether or not the Fed is going to cut interest rates. That has become a very important issue right now. Number two, it's because, and again, this is delayed for a couple months, so I don't know what it's done the last couple months. But margin balances are as high as they were back in 2021. Now, when I say that, alarm bells should be going off in your head to some extent. What happened at the end of 2021, right? The market slammed down, and for a good half of the year in 2022, the market was in a bear market. Right? It turned into a bear market. So it was because of a couple different things. Now, also, what was the Fed doing as we got to 2021? Excuse me, 2022. They started to raise interest rates. So you had the combination of an over leveraged market in 2021, and inflation rose, and the Fed had to come in and start cutting interest rates. Hence, the market had a tantrum. What do you have going on right now? You also, and again, we don't know what's happened the last couple months. And I think the data has been delayed because of the government shutdown, but it's right back to where it was in 2021. And it's just so. Do I think I've heard a lot of comparisons about 1999 and right now? Guys, it's not 1999, so stop it. Like, I don't know if people are trying to do this to be snarky, but it's not 1999. The reason why is because there's plenty of companies that are making a lot of money. The valuations are different than it was in 1999, much different. But could it be 2019? Excuse me, not 2019. Could it? Sorry, it's been a long week. Could it be 2021? Yes, it could be 2021. What did we have in 2021? We had SPACs. We had people sending gifts, buying gifts, right? We had a lot of speculation in this market. What do we have this year? Well, we don't have SPACs, but we had a ton of IPOs. We have people betting on derivatives of cryptos with these tokenized. I don't even know what they call it. You can't even, the people who made up these things, they can't explain them well either. But regardless of there's different products out there which are highly speculative that are out there. You have a huge influx of leveraged ETFs in single names. That's never been seen before. So yes, the speculation this year has run rampant. All right. So I never like to compare other years because they never ever play out exactly the same. There are similarities. So I think that there's a lot. If I were to guess where what this time is most similar to, it's an easy one. It's 2021, where there was similar high speculation, high leverage. What's the one thing that could be different? Well, let me go back to this. Sorry, bear with me. Talk amongst yourselves. But it's this. It's the fact that the Fed has been cutting interest rates the last couple meetings. The risk is that they don't continue to do it. And the danger is that, as I've been saying, is that there's a lot of leverage in this system. And that's, by the way, exactly what happened with Bitcoin. Right? It is not because of some, again, I don't want to go off on another tangent, but it's not because of any conspiracy theories, guys. It's the fact that there's over leverage and not a lot of liquidity. And it's not the market maker's fault either. Right? Market makers do their job. They may widen out a little bit when we're in times of volatility. All right. So please don't go there. These are bad excuses. So that brings us to, at this point, yes, we're going to, like, I do think if they do not cut interest rates come December 10th, this market's going to continue to go down. There's just too much leverage and there's not enough liquidity in this market. So, yes, I think that that needs to happen. Now, that's not the only issue. So again, I'm sorry to be negative here, but I think let's start going through the charts. I think that there's a lot of groups, that are really beaten up, and I don't think these things come right back. Right? I don't. I think it's going to take some time. Now, let me just bring up one other chart. I'm talking about Meta because this is also very similar to this. Remember when Meta used to be called Facebook and then they changed their name and they upped all the capital expenditures? When did that happen? Well, that was at the end of 2021. And look at what Meta did, right? It really got beaten up. What recovered Meta? Well, they dialed down their spending and they focused on their core business. Uh, Facebook, Instagram, right? All of those things that generate money for Meta, right? And they got rid of the metaverse nonsense. Well, they've been spending money like crazy right now. The market doesn't like it. Probably they're going to need to switch and say at some point and cut down on their spending. That's what brought the stock back up. Focus on their core business. Which brings us to AI right now. I don't know what stage we are in AI. I don't. I'm not smart enough to answer that question. There's better people to listen to about what inning they think the AI is in. But I could tell you this much. One thing that I think is an issue for all these companies that are playing this game of we're going to give you nine billion and that's going to and then we're going to fund 9 billion to this group. What I know about technology over time is that it does get better and better, right? So all these companies that are outlaying this money, if it does improve, right? If somebody comes out with a better mousetrap, right? A lot of these companies that are spending all this money are probably wasting money. Hence, what you're seeing left and right, right? Microsoft breaking down. Look at what Microsoft did today. Right? The Qs were up. Qs were even up. IWM at 2.8%. What did Microsoft do today? It was down 1.3% today. What does Nvidia look like? It's teetering. Now it took out this VPOC and it could snap back, but here's the issue. This stock goes up, it's helping all these other groups out there. And I don't like that. I don't like when a whole not only an industry, not even the semiconductors, most of tech, most of uranium names, rare earth names, all of it is tied to this company and whether it's doing well. And to me, so that's my concerns. Now, let's talk about. So I think this is going to continue to be a problem area. I do. But we'll see. And I'll let the price be the guide. Now, let me get into some positives, right? Yes, this is a strong seasonal week that we're getting into. So we could bounce. Here's something that I think is interesting, right? We're finally getting some oversold readings. Look at the NIMO, negative 66. Officially, negative 70 is oversold, right? But this means that things are pretty washed out, right? When we're around a negative 70, so it's close. Same thing with this is the McClellan oscillator for New York Stock Exchange. Also, when you look at the NASDAQ, uh, that's a negative 62. So that's also, we're pretty washed out here. So what areas do I want to be in right now? I would rather be in the areas that are going up. And I think that you go back and I think we've got a lot of names that are strong, strong earnings. but I don't know if it's going to be the AI trade, right? Um, really liked what Pharma's doing, right? Nice move higher out of consolidation. These are nice looking charts. Um, I want to say G-Men because I'm a Giants fan, but it's GMED. But regardless, this is a nice move, right? Closed on its highs today, up 4.5% today. Um, what else was it? XBI, right? More deals, by the way, this week. It kind of got overshadowed, but Exact Sciences is being bought out by Abbott Labs. We are hearing about more and more deals, right? And we've heard for a while that the big pharma healthcare names have a lot of cash and they want to be buying companies. This is where the strength is right now, right? And it's really changed. And it's also been bucking the trend, right? Normally, when interest rates go higher, um, or if there's not going to be as many rate cuts, XBI has been lumped in that with that group that it goes down. It's not going down anymore. So something has changed with biotech and it's much, much stronger. Here's XLV as well, right? The new high today. This is where the strength is. And then I would also say, look at, look at what TGX did on earnings. Look at what Ross Stores did on earnings. That's a new high. I mean, that's a very impressive high, candle, right? I think that this could run for a couple days. Why? Because it's under owned. You don't hear people talking about TGX and Ross Stores, right? You hear about people talking about AI stocks. So I get it. We've all been that's been one of the best trends, the Palantirs, um, for, for the last couple months. But I think a lot of these charts are pretty damaged, and there's probably still too overcrowded. So that's my guess for. So I think that we could rally next week because we're pretty oversold. But I would be looking at other areas than just AI stocks. We just don't know what's going to come out of this. Google, this is one name I'm long. I had it in my video, not video, but last week when it touched the 20-day moving average. I unfortunately didn't feel great about the market last week, so I sold it. I didn't have to. I got to follow my technical rules a little bit better. But it is moving higher here and showing relative strength out of this group. So I am long Google. I also took a little position in Robinhood. So again, like this is how I'm playing in this sandbox, right? Robinhood took out the VPOC down here, right? So if it doesn't hold this, I'm out, right? And this is a small position for me. The PPH ETF is a bigger position for me because that's acting better. But look at how buried this is below the 50-day moving average. Right? This is not a good tech. So I'm in this for a bounce, right? And then we'll see how the bounce goes if it does bounce, right? Because it's not an AI stock. What about Bitcoin? I think Bitcoin will be interesting to watch next week. Right? It did take out a VPOC, right? Um, the performance, by the way, for Bitcoin is now lagging some of the other highly speculative areas of the market. Bitcoin is now down 23% month to date, 23%. The ARK Innovation ETF is down 18%, and so is the IBD 50. So yeah, if you're going to play that game where you're going to tell people that there's glitches and stuff, well, what was the glitch in the IBD 50 ETF? What was the glitch in the ARK Innovation ETF? It's not a glitch, guys. It's an unwind of highly speculative assets. Last thing, right? All I'm trying to do is just provide some perspective and also give you good information rather than bad information about on what you're hearing from people who are way leveraged into trades, have a big ego, and won't admit that they're wrong. So here's where we are. Here's what outperformed this week. There it is, biotech again, healthcare, the home builders. Again, I think for the home builders to go higher, you're going to need not only a rate cut in December 10th, but another rate cut after that. Consumer staples outperformed today. Banks, this is for the week. Solar underperformed. Uranium, clean energy, semis were down 5.5% for the week. Tech down 5% for the week. Quantum down 5% for the week. China down 5% for the week. Aerospace and defense down 3.7% for the week. Again, probably just a little bit overcrowded stuff. Metals and mining down 3.4% for the week. All right, guys. So again, I think that the market is dealing with a few different issues. Liquidity, leverage. Those are the two big things. Big help today to hear that the Fed is back open to cutting rates in December 10th. We don't know how that's going to turn out. We need to hear more of that. We need to hear them come out and signal. Yeah, there's a good chance that we're going to cut interest rates. We've looked at some of the data and it makes sense to cut interest rates. That will help the market tremendously as it did today. Have a great weekend, everybody. See you on Monday.